Welcome to the Forex forecast for 2015, the revised edition thereof. This is our disclaimer and warning, duly noted. This has been prepared by Ideal Financial Group, Corporate Authorities Representative 299753 of Aruda Proprietary Limited, AFSL 338674, and Ades Trading Proprietary Limited. This is general advice and should not be seen as constituting financial product advice and does not take into account your objectives, investment, financial situation, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and hang out and read the Financial Services Guide and consider the product disclosure statement available from i-deal.com.au. Trading is risky, and really, if you can't risk the money, then that's not a good thing. We're looking at quickly at the reversals to the downside that are possible. Not sure why that's come up so quickly, but there are none. Reversals up. Currently, we're seeing the Aussie Kiwi actually rally, which has taken what could be normally said as a very long time to get a reversal. Let's pick it up here, and hopefully you can see the screen okay. Just give me an idea whether you can see the screen or not, and hopefully it's working. Aussie Kiwi, we have seen, look at this, unbelievable. It bottomed a month ago and rallies into May. Thanks, Charles. So in May, that's a beautiful thing. We probably should rally back up to 1.05 or up to 1.0522 or 1.04. So if you're thinking of going along the Aussie Kiwi, you can do so. Your seasonal pattern is with you, which I think I've shown you previously. Where's an Aussie? Where's a currency? Where's a currency? Where's a currency? Let's just do HGG, see if they've got that. This is the monthly chart, which is starting to look okay. And we can see the seasonals tends to go up until mid-May. So we've got a couple of weeks. It sort of bottomed a little bit later than normal and generally gets a bit funny. You can see here it drops down for the ski season into about the 10th of October, then rallies up into late October and then collapses. Why it does that, I don't know, but that seems to be the seasonal pattern. So we're still weak, but got another 2 weeks of maybe up in the Aussie Kiwi. So that's working. The Aussie US is working. Let's see if that's a seasonal pattern. I don't think it is, but it's a maybe a normal one. $79.44, that's been a pretty reasonable target to expect, and so seasonally tends to top this week and then dive off for a little bit. So if you've been enjoying the fruits of this rally, which started really on a good time in mid-March, you might want to bank some of the cash in the Aussie market itself. GBP, same deal. It's also in a it's been in a fifth, like a terminating move, and has had a good rally. This is the weekly charts we see seasonally. It likes to get banged on its head 1st of May. So we're coming up to a time where we can start to put our bear suits on for the other currencies and our bull suits on for the US dollar. We did expect it to rally a bit. US dollar, Canadian dollar, let's see if it's got its own. So write some of these things down because unfortunately I don't remember as much as I should these days. The dollar CAD, it tends to have a bit more down and probably down into July. So not the best thing since sliced spread. Let's have a look at the euro and see what its tendencies are. Euro also is a little bit, holds up a bit till mid-May, but down into early June. I'd say about 6 till early June. The US dollar index. US dollar index tends to have a dip around now and then starts back up again. So we have been thinking about, where was that level? 92.44 level on the US dollar index. Where are we? Boom, 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 boom. So think about that. 92.44 is an ideal area. I can't think that it's going to get there really easily. I mean, look at that. That's a hell of a long way away. Really, we might have to do with make do with 94. This one here, 94.25 or 95.51, 59. Ends up who thinks that they want to buy down at 94.25 or rather than 94.23. I think it's 94.25. That's certainly the place where we want to do that. So PHG trade. Half. Stop. 97.5 or a break above. Oops. Horrible what has just happened in my computer. Or a break above 98.20. Stop would be 93.70 if we're taking it. Okay, we also have some other wondrous. Love to know why I'm getting a transcript being made, but it doesn't seem to be carrying too much. Dollar CAD we talked about already. Okay, now let's look at this. Look at this is the dollar CAD. Now this is since 2000, and we have wave one up there, and then we have this mess. What is best described as a mess? Now, when we look at this ABC mess, WXY, that's where I start to get uninterested in wave counts, but I would say 1.2066 is the best target to look for before another rally. That's not far away in the Canada. In the Aussie, we have something more fascinating than we can ever imagine, and that is that it thinks that right here, it's got a wave 2 underway in this zone here. Sorry, for some reason I have to draw well to the side to actually, I just don't get that. So around here, this could mean that if we get it, and that got me, when I saw this, it got me actually thinking about, it really got me thinking about the US dollar. And could we simply be getting a bear market rally in the US dollar that is so strong that everyone gets really wrapped up in the US dollar? Everyone gets really bullish because yes, US interest rates seem like they're going to go up. And if it doesn't, what's going to happen with that? What will happen with that? So my interest was peaked in the US dollar, and I had a quick look at a couple of bigger wave counts, which we'll get to a bit later. But what we see here is continuations up is the GBP EUR. Now, I don't normally chart the GBP EUR. For those of you who are familiar with it, or unfamiliar with it, let's have a look at what it looks like. On the weeklies, and it tends to have a seasonal trend which starts off in May, 6th of May, and continues up. So if you're thinking about buying this, it's got a wave count that's a continuation. It's got a time count that's useful. Where would you buy it though? It would be nice to buy it back at 1.326 or maybe a little bit lower at the moment. Can you get that? Possibly. So that'll be of interest there, the GBP USD. Continuations down are Aussie Kiwi. That's a good high probability in my thought process. Now let's look at our laser pointer and see if it can do any better than the other one. Oh yes, it's easier. Notice it says here wave 1, 2, 3, 4. So it's a nearing completion on this leg, and we've got wave 1, 2, 1, 2. So there's probably down to 96.83 on the downside against the Kiwi. Now, would that make that fun? I think so. That would be way fun. But I know I do feel that we're going to have to wait for another, really till the end of May before that happens. So expect more churning. Now, this is what we're seeing here is the pound against the US dollar. And we can see here that really 2's been the high and 1.4 to 1.3 is being the low. So at the moment it's rallying up, but really for the past dare I say it, 23 years, the pound hasn't done anything. And for what reason? For what has this come to, this entire ranging behaviour? It's done nothing. It's just gone between 140 and 200, 130, 200. Yes, it popped to 20, whatever it was. But the pound just ain't what it used to be. There were some massive moves in the 80s, and then I think the public discovered it in around this period, and then it got smacked, and then it hasn't done anything for a long time. So really hasn't done anything. But let's look at the wave count. We've got an A, B, C, A, B, C, A, B, C. Uninteresting. Okay, we talked about trades and dates a little bit. There's nothing really to go on trades and dates. I wanted to do the wave count on the dollar index, and that's important. And it's not up on the screen, but we can see here it's saying this pattern up here, this movement up here, and I was a C. This is wave 1. This is wave 2. Goodness knows why that's an irregular B wave, but let's just go with what it thinks. This is wave 2, which it did have a dramatic decline from 121. And this is wave 1. Now it thinks, and it has been thinking this for quite some time, that this is wave 2. And it's back into the zone of target at 106.24. And if it cleared through 122, it would be looking like the US dollar is getting stronger. So what does it mean? Are we at the forefront of the US dollar just sucking everybody in before we change our currency of exchange from the US dollar to the Chinese currency? I don't know, but there's so much, if the Chinese were spending yuan in the rest of the world rather than US dollars, because they price a lot of their goods in US dollars, if they priced them in yuan, I think the reserve currency would have to very quickly go to the Chinese. We've got to remember the Chinese very quickly got rich, just like the US very quickly got rich in the 30s, 20s, 30s, 40s, while Europe just was too busy arguing with itself to do anything good. So the Americans took the opportunity, and it was certainly a well thought out opportunity to do business with both sides of the war, people at war, and then side with the one that was likely to win. In any event, this gives a target down towards 58.20 on the big primary time frame. So really, can we get too excited about it? This is still calling it down towards 94.53. That's probably the best area, as I said before, we could expect. Stop would be at 100. So all in all, we're going to be short to medium term bullish, looking to dips to buy in the US dollar index, but then probably negative in the longer term. So while the US dollar's got all the love in the world at the moment, it will go up eventually, but it really needs to clear 121 in the dollar index to be certain of long-term love. I don't think it's going to get it. I think you'll see it come down to that 94.22, 94.50, whatever it is, go up a bit, try 106, fail, and then set up for a bigger bear market. And that's not the conclusion I thought that I would have. So let's drop into the commodities, and I'm not going to separate these. I'm really not going to separate these recordings anymore because I don't find it useful, and I don't think anyone minds looking at the Forex first or scanning through it. So let's look at the commodities, and we've all talked about the 100. It's the US dollar is the dominating thing. It stopped growing in value, so commodity prices in it have held up, or have they? We've been whipped on the corn. Corn's been smashed. A few of the other things have been smashed. So here's a disclaimer and warning prepared by Ideal Financial Group, Corporate Authorised Representative 299753 of Aruda Proprietary Limited, AFSL 338674, and Ades Trading Proprietary Limited. Trading is risky. Trading can hurt your wallet as well as enhance it. This information is not prepared for your specific needs or circumstances. So therefore, I'd really love it if you made Therefore, I'd really love it if you were very careful about what you're doing in the markets. And this is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide and consider the product disclosure statement, PDS, issued and available from ideal.com.au prior to investing. We've made every effort to ensure the accuracy of the information as at date of publication is accurate. However, no warranty or representation as to the accuracy, reliability, or completeness of the information is made. To the extent permitted by law, we accept no responsibility for any errors, misstatements, negligent or otherwise. The information provided may be based on assumptions or market conditions and may change without notice. Consult a licensed investment advisor. Trading is risky and it may not suit you emotionally. We've seen the forecast before. We've seen what the bonds should be doing if the world was normal. The world has come back to a bit of normality as far as I'm concerned in a few ways, but not yet. We still have the tech bubble. We still have a bubble in bonds. We still have some pretty strange behavior going on in the markets. Things become highly sought after and then dumped the next day. It's like I guess I might make analogies because they're too late to do. It's too late to do analogies. But here, the bonds, if they do back off, and they do seem to have at least going sideways behavior. They don't have any real negative behavior or real positive. But if the bonds can come off a bit and interest rates go off throughout the course of this year, that will be a little bit of a warning to everything. These are what I think is happening. We can see the CRB index should start to take off. So when does it take off? Really from early May, which is in the next couple of weeks. Next week, we'll have a look. Copper, mid-May, starting to take off. Gold, early July, starting to take off. Coffee, still sick until really over here, which is October. And coffee, we'll have a quick squeeze at coffee. We've seen what it's been doing. I think I've got a coffee wave count for you. But coffee has been doing everything I have said and less in terms of the rally and more in terms of the decline. This big choppy thing, I thought it might go to 150.20, but 120 is the logical target. So coffee is working in pattern to cycle. Cotton. Now, we've been long cotton and we went to get out today. I think we're looking to get out. We see cotton has had a retry at the top. We got long down here. I think it's a good idea to get out given the cycles that it may experience soon. Early April, a retest in late April before a collapse. In fact, we might be looking for shorts in cotton. Cotton, shorts in cotton. Sorry. Crude oil. We certainly worked out that crude oil was going up. Forget about that trade there, but crude oil is ranging like in this behavior and may start to shoot up towards $68 or higher over the next little while. Natural gas, looking for a low at the end of May, so we've been holding off from natural gas. Getting ready for that to go soon into early October. Here are some current commodity waves that we see around. Reversals to the downside, nothing. Crude oil, reversals up has already happened. Natural gas, not just yet. Sugar, that has happened. Let's have a look at sugar. Not quite broke up in the monthly, so it's a little bit of a worry. We've been buying deep out of the money options, and that's been working. We've also bought some down on this low, so we might have to work a bit harder about where the positions are. I still think it's got a bit of a chance. Let's have a look and see what its seasonals do. Seasonals tend to bottom now or early May. That's not the best. Let's see where we are. Yeah, tend to bottom early May. Have a retest in late May. So we might be needing to tighten that stop up. Let's move our stop up to 1271 on sugar. And your longer dated options, you might want to sell out some of them. You've had a good run in them, which is probably true. Soybean oil, which we're actually looking to buy into. We've been having PHG trades. There's no need to talk about that. Rough rice, which we are looking to buy into. No real need to talk about that. It's got a double bottom, which we've all just seen on the previous webinars, in the speed webinars. And silver also, which we've had a short trade on and we're now getting out of, or got out of last night. So in terms of the continuations up or down, crude oil was on the list for down. It's now gone off the list for down. The continuations up, we've got some 10-year bonds and 10-year notes and some US dollar index. So I'm confused by the 10-year notes sitting there, but the US dollar index doesn't confuse me. Here are some trades that I don't recommend highly. These are tendencies. What I would say is that coffee being short from the 22nd of May to the third week of June is a percentage chance. Now, 10-year notes being long from mid-May to early August is also a percentage chance. And natural gas is a tendency for a rally late May. Forget about this short. Oops. That's the one I want to wipe out. Late May to the third week of July. That's a tendency. Now I'm going to run through a few conclusions quickly, and we'll look at some of the markets that you're interested in. We'll do some wave counts. Commodities, despite weaker US dollar, commodities aren't all that fun. Gold's doing a bit better than I thought. We're going to look at a wave count of that. Watch for lows around 125, 120. It's also 120. Now or 116.21, but weak from the third week of May. Let's pick out some gold. And see what the thing thinks of it. Now, it's still giving us alphabet soup on this one. It's gone 1, 2, 1, 2, 3. So it's still expecting a decline, even as low as 649, but more logically around that 860 area. I can't disagree with it. And it doesn't really get bullish until it takes 1308, and that's really my level as well. So gold, still expect that decline in line with the last leg of the US dollar. Once the US dollar has finished its run, then we can look to buy gold for the next move up in gold and the next move down in the US dollar index and US dollar itself. Are there any commodities that people want to have a good look at? We'll pick up copper. Actually, no. Let's do crude oil. Just pop in the commodities that you're interested in. Crude oil. What we're seeing with crude oil is not a lot, but it's saying here wave 5, 2, 1, 2, 3. This is impressive if this comes true. Your exit is around about $50 if you are long, and get really excited if it takes out $87.15, which is up around here. For my money, I think you've seen a lower swing, a higher swing high, higher swing high, higher swing high. Sorry, higher swing low, higher swing high, higher swing low, higher swing low, higher swing low. That would constitute a definition of an uptrend. And it's okay to think crude oil is going higher because they've withdrawn so much supply. Now, Mark wants to have a look at some wheat. So let's pick up wheat. See what wheat's doing. Now, wheat itself thinks it's in a wave 2, bigger term, but the trend is down and negative with a target somewhere down about 348, which I've been talking about, 385 on the downside if it gets really bad. So at the moment, wheat, I can't give any life to until it gets clearly above, really above 540 or thereabouts there. It's got it here about 544. So best thing, hang loose. Let's look at gold. We've done gold. Funny about that. Crude oil. Let's pick up another one. Soybeans. Actually, no. Let's look at the 30-year bonds. The 30-year bonds is allegedly in a wave 5. Now, notice here it says that this wave is down for 1 and this wave is up for 2, which means it should release itself down towards 144. That is a long way away. But look here on this one, we're just getting down, drilling down to the minor time periods. A break below 160, in fact 161, would consider this has gone bad. That is not that far away when you consider the pricing is at 162 and 3/4 right now. So US bonds might need a little push and we'll be looking to the downside. It did have some targets towards 166, 2 targets towards 166 and another one towards 176 and 178. With a bit of luck, it stopped doing what it's doing, and there's no, I guess there's no real way of getting too bearish on this just yet, but it would be nice to see it start to get nuked. This is a little flag, and we are short still on a PHG trade, and a breakdown below 161 24 30 seconds would yield 158 or 157. So notice that the volume is contracting as it's rallying, and it's come back up to resistance. So the short is to look for, I think, is in bonds, 30 years, more so than the 10s. 10s may cop it a bit more. Cyclically, the 10s get a bit stronger later on in May. The other one I don't think we did was the beans. And now in the beans, we see horrible letters. W, X, Y, X, A, B, C. Probably best to think about 776 on the downside at this point. There is a bit of support down around here at 904, but 776 would be a nice area. Be very nice down there to be buying soybeans, and we do see some 5-wave pattern style patterns coming out on that. Just for fun, let's have a look at what palladium and things like that are doing in terms of wave counts. Did we do a wave count on coffee? I didn't think we did. Let's do it. And then we'll have a look at cocoa as well. Notice here 1, 2, 106, 23, 126, whatever it is. So at the moment, it's not a happy chappy. You can just assume it's got troubles. Let's look at cocoa. And soybean meal has been also one of those ones which has been negative. We see this one. Where are we going? You can see a nice 5-wave structure on the wave count. We've been thinking that it can get down to 284, which is a little bit above where the machine thinks it's going. This is cocoa. I'm thinking soybean meal. See here we've got a 4th wave pattern. Notice that we did get a good short away, but it didn't last. Let's have a look at this one. Cocoa. $29.64. It's coming up. Okay, so 30.48 or 31.20 is the target. As I said today, you could probably go long with a stop below 28.50. Rough rice. I'd like to see this. This is getting into the zone where it is becoming interesting. But it needs to break up. So if it does break up, expect 11.03. Platinum, let's have a look at that. And again, a lot of these moves for me are US dollar related. They're not really supply related, except maybe in corn, which we're going to have a wave count on soon. 1, 2, 3, 4 to the downside on platinum. Wave 1 up here. What does this mean? It's C, 1, 2, 3, 4. Completion down at 825 would be good when gold gets down there. So don't get too excited about platinum. Next one I want to squeeze at is corn. And we'll do a wave count on cotton as well. I didn't think I pulled that out. So this is corn with again another C wave pattern, looking for lower levels down around 228. More likely 318 on the downside. I'm not sure if we'll ever see 228 or 205 on the lows as well for corn. They're going to have to change the way they do their farming, really, surely, or everyone's going to hate to eat corn. The other one I want to particularly have a look at is sugar. Sugar still is on the downtrend, but it starts to get more healthier above $18. So it's not that awesome, really. We're still long sugar. You can expect to rally up to 14.21 or something in the next little while. I'd like to see it get a lot better. Notice here we've got 1, 2. This is 1, 2, 1, 2. So that's a bit scary. It would be looking for 10.28 on the downside to 9.92. At the moment, we'll stay there, but in a little while, we might have to run for cover on sugar. Just raise up those stops. Do we have any specific commodities that we would like to talk about with, or should we all get some sleep? I'm sorry, I'd like to say this really exciting stuff, but there's not a lot of strong tendencies that come out in May. And there is a bit of a tendencies in June, but the currencies would seem to be the fun place to be rather than commodities. What about OJ, just for the hell of it? I don't know if I've got this on. We are long OJ, which you're all aware of. Out. And let's see if we can pick it up, see what the wave count is. It's good doing the wave counts once a week because otherwise they'll just do your head in. That wasn't very successful. Why wasn't that successful? Boom, 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 boom. Don't think I've got OJ in here. Lumber. See if we can do LB2. Looks like the machine's just blown its mind. So gold, we haven't seen a lot out of it. platinum is not backing it up. Silver, probably not backing it up as well. So we've got a rally in gold at the moment, but it really needs to get seriously another $100 higher, which I don't think it will. Here's lumber. I'm now feeding it the same information. Anyway, it doesn't like it. It's not to worry. We'll have a look at lumber on a big picture. We are long lumber on a PHG trade, but I'm nervous and I'm happy to scratch it at the moment. Notice that it's got a bit of space between it and the old lows. So backing off here, it's time to get out of lumber and not get too wrapped up about it. Oh, but then we look at the big picture and we see lumber is okay. So how can we do this? It nailed actually the ratio. The best thing is to buy more above 268. So lumber, buy more above 268. So we'll buy dips down to 249. Stop at 242. And then we'll buy break up above 268 with a 248 stop. So the lumber is it's in a good zone, but in the longer term, but in the shorter term, it's not following through too well. So hopefully it has a pullback. We'll be looking for 289 on the top side. I'll put those in the box because a lot of them won't matter so much. I'll put those in the box. Do we have any real questions coming up, or should we get some sleep? Maybe it's me that needs the sleep, but certainly been working hard. Okay, Mark, thanks. Mark's saying good night. Sleep. Thanks, Julie. Okay, sleep. Sleep has beckoned. No, Julie. Thanks, Charles. Thanks, everyone. Have a good one. Thanks, Mark. David. Teresa, have a good one. Have a good night. Bye-bye.